Hi, this is Doc Severson for the Theo Night Report for Tuesday, November 15th. Tonight I've got three things that I want to bring up in terms of the current market character and what's happening, and then actually go over and talk about what I see probably happening next. Today in the S&Ps, we had another one of these low volume kind of grinding moves higher that's coming out of a 3-day base and consolidation. So 3 days of sort of inside days, outside days, and then finally we start to see a little bit of a break higher and that short squeeze, which is nothing different than what we've seen really throughout this year. So the entire year, every move has been started off by a wicked move down and then a squeeze off of that move into consolidation, then another wicked move down, in this case a limit move down back in late June on the Brexit, and a squeeze off of that move into consolidation. What do you think's happened now off of the election? A limit down move and wicked move back up again on a squeeze. Same recipe. This is the third time this year we've seen it. Each one of these is getting a little bit smaller and a little bit more muted in terms of the action. The important thing to notice about this, though, is that nobody is buying the highs. As the price gets up to the highs after the squeeze, nobody's buying it. This is where the consolidation gets into play. And I think we may see the same thing as we get up to 2200, but yet that is yet to be seen. We have already started to see the Russell 2000 get up into all-time new highs based on the same move. So it had a date of destiny up there with 1296, and it's exceeded that and hit just above 1301. Now, if we go to the intraday chart, what's setting up these moves, these squeeze moves, is generally the same thing that happens all the time. Early in the morning, we're starting to see some gap down or a sell-off in the first couple of hours of the day, and then we start to see a move above that range, and it turns into a squeeze. We've seen this move time and time again over the last 7 years. This has not changed. We're in exactly the same type of character. And if we go back out to the daily chart again, there's one more different type of character that we're seeing on the charts that is very unique, and we've only seen this since 2013, right? So if we look at this, markets are actually rising faster than they're falling. We saw this even just this week, right? The past 2 weeks, we saw the market sort of drifting down, and then huge short squeeze higher. This is the way that we've seen markets move since 2013, since this world of quantitative easing. So that brings me to my second point. This is where we see fund managers chasing after performance into the end of the year. So we have sector rotation happening right now. Based on the outcome of the election, we see people chasing after performance right now. And that brings me to my third point, which is that these guys are trying to get theirs before the uncertainty hits. Because when you have a new administration, there's going to be tons of uncertainty. There's going to be things that are said that are not expected that will cause quick downdrafts. So I think we're going to see, as we get into the end of the year, we're going to see the end of this sort of move, right? And we're going to see much more of this realized volatility. We're going to see much more of this type of stuff. Whether or not it net works out to the upside or not, it doesn't really matter, but we will see realized volatility start to increase as we get into the new year. I mean, think about all the ways that the boat could get rocked here over the next 6 months. We have already had a candidate, the winning candidate, talk about firing the Fed head, right, Janet Yellen. So that is going to lead to uncertainty in the market. There's already a number of policies that are out there. Again, very pro-growth on the surface, but I think the concern here is that anytime you change an administration that's been in power for 8 years, there are going to be bumps and bruises as that new administration kind of slides in and starts to do their thing without rocking the boat. And I just don't see how we do that without rocking the boat and creating uncertainty. So again, the net here is that I think traders are going to get what they can, while the waters are still calm, while there's still certainty out there. And then lock in those profits on the first sign of uncertainty as the volatility kicks up. So I think we're going to have an interesting beginning of 2017. So what kind of strategies would work for something like that? What kind of strategies are going to work for an environment where we expect to see greater realized volatility? Well, a couple of things. First of all, what you can do is you can shorten up your time frame and take quicker profits. So play within the swings inside of here is certainly going to be appropriate. Perhaps reduce your time risk if you're anticipating seeing more volatility for that. So that's one way to do it, is actually be not in the market through a lot of these moves. The second thing is, I would say this is mostly for people that are selling options, is that you've got to be aware of your downside risk, especially with the complacency that's out there. And frankly, after all of this, after years of this, people are just not used to seeing downside action. It was such a huge shock back in August of 2015 when we dropped that many points, right? So everybody's kind of looking over their shoulder, but they're not used to trading that type of volatility. So you've got to be aware of how you can protect your downside and deal with, I mean, look at this. We got 2 limit down events in the space of about 5 months. We haven't had that kind of volatility since October of 2008. We're just not used to it. And it makes it very difficult to trade options if you've got risk that you cannot hedge off overnight. So I personally am going to be adapting to positions where I have zero concern for downside risk moving forward. And again, the reason for that is not necessarily that I'm thinking that the market's going to crash or anything like that. I just think that the amount of realized volatility will tick up and is going to make it very difficult to hold positions, especially to the downside. So that is it for tonight's report. Thanks for listening, folks, and we'll see you tomorrow.